research performed on companies that were members of the Chamber of Mines from 1951 to 2011 reveal exactly where the revenues from gold mining activity have gone. An interesting finding was that government, through taxes, received the same level of returns as shareholders did through dividends. Joining us on the desk to discuss the impact that a nationalisation of mines could have is Bruce Williamson. He's from Imara Asset Management. Welcome, Bruce. So certainly some eye-popping sort of statistic, and I think it's exactly the kind of information we need to bring content to some of these discussions.
Yeah, absolutely. As an analyst, I'd followed those numbers for a long, long time. And so it was really a case of going back and updating myself, and I had a good idea of what the final numbers would be. And as you see from that summary, which is strictly a Chamber of Mines gold summary, but it's 60 years of data, and what it shows you is that direct tax paid to government was about 7.2% of revenue, and shareholders was about 7.5%. But if you had to delve into the working cost figure, where at times salaries and wages could have accounted for as much as 50%, and then strip out the PAYE, and then all the multiple effects of other companies doing business with the mines, you'll see that the government actually directly and indirectly received far more than the dividends received by the shareholders.
Yes. And to a large extent, this is not factored in the tension that you often see between government and capital.
No, absolutely not. And that's why I put those numbers together, because it's just straight evidence.
Bruce, we've seen this debate, we've seen this play out in Zambia and other countries. You meet with fund managers and investors and owners of businesses on the continent. What's this talk of nationalisation doing to the image of South Africa as a mining destination?
Obviously, it's not doing us any good. And I think really because global investors understand that governments are not as efficient as the private sector in operating mining companies, and certainly big ones. It's as simple as that.
Now, we're going to talk about some of the companies that you've been investing in, but is there any sort of feedback you've gotten from government officials in the rest of the continent about South Africa going through the nationalisation debate?
No, I can't say that I've got an updated answer for you. But I think the lead, guys, is you have to look at what Botswana are doing, increasingly looking at the investment codes and their tax regime, and looking at where they have already introduced partly a progressive tax system, which is what our gold industry survived on, is a progressive tax system, meaning that when you can't afford to pay, you don't hit the marginal mines. When you are making a small profit, tax rate is lower than corporate tax rates. When you're really making so-called super profits, you will pay a lot more. And a country like Botswana are doing that, and that's hugely attractive in my book.
So just in terms of where we're going, in terms of the continent, we've had the Chinese slowdown, so to speak, and the resources have kind of become a little bit out of favor. We've had problems here in South Africa with striking workers and issues around labor. What's happening on the continent in terms of resources? Because your fund is aimed at investing in resource companies on the continent. Is activity picking up? Has it stayed the same, or has there been a bit of a slowdown?
Yeah, it's probably slowed down a bit. But I mean, the encouraging thing to me is when I look at my portfolio, a lot of the shares have been hammered this year in the last 12 months. But the encouraging thing is that literally every company has made progress. Now, whether it is an exploration company, or in a development stage, or actually building the mine, or growing their production, all of them in one way or another are making progress. So it's not a story that they're going backwards at all.
Bruce, what about progress? Going back perhaps to the issue of taxation, that's just one element of this resource nationalism that we're seeing, not just in Africa, but globally, countries like Australia, etc. So what sort of developments are we seeing there? We know what's happening in South Africa, but where else are matters intensifying or even relaxing?
Yeah, well, as I mentioned, Botswana relaxing. I think Zambia have been pretty progressive in more recent years, attracting investors and doing the right things. Mali is a country that's in a bit of turmoil, and yeah, you're seeing calls. As soon as there's political and social turmoil, yes, people seem to think that, well, we need to take back what's in the ground. And I think what people forget is there's a huge cost to getting the minerals out the ground. They're not lying there free. They appear to be lying there free, but you've got to get them out.
In that context, your selection criteria for countries is security of tenure, you say, infrastructure being satisfactory, positive labour market practices, and mining code that's transparent, similar to what you see in Canada and Australia. And that does that give you a rather small universe or not? Is that universe growing?
Yeah, I think, put it that way, if you looked at the risk, if you did a risk assessment, that would be your ideal shopping list. Truth is, you don't find that in the world, and Australia was an example where suddenly Prime Minister wanted to impose a super tax. So yeah, in a real world, that's what I'd like to find out there. But I think what I've learned is that I need to also concentrate on return. And South Africa is an example where I think a lot of people just assumed the return was always there. So we said decent return and low risk. What we started finding was more and more risk being added in South Africa, and in fact lower and lower return. So what I like to do is, when I'm looking at these stocks in Africa, is concentrate on the return. If the return is there and I can tick those boxes reasonably, people are getting on with their lives, they're getting on with their jobs. I mean, the great thing about what's happening in Africa is you're seeing lots of small teams of skills. Previously, they couldn't go out on their own. Why can they get out on their own now? Because the geological and exploration technology is enormous, and it lends itself to small guys with not as much money as previously. They can get into that exploration space, and 40 years ago that opportunity didn't exist.
Now, there's been a couple of hotspots. I mean, we've got some the continent's got some fantastic opportunities in terms of resources. One of them is the copper belt in the DRC and Zambia. Another one recently has been the discovery of oil and gas off the east coast of Africa, and even some discoveries in Kenya on the mainland continent. Can you get access to these, or are the major gas suppliers snapping these opportunities up?
No, there are some smaller ones. I mean, I must say that I'm an ex-mining guy, so my expertise lies a little bit more on the mining side, but we include in the portfolio oil and gas and agriculture. I just wish I could find more listed agricultural stocks. But let me say that from oil and gas, from Namibia right up, all the way up the west coast, as far as you can get, oil and gas hubs all over the place. And the same has happened from Mozambique all the way to Somaliland, and coming inland. I guess my sort of highlight in the oil and gas recently has been Cove Energy, which piggybacked with a couple of big guys in Mozambique. The Rovuma Basin now is just churning out potential gas, and sadly now that share has now been bought by the Thai Petroleum Company, so that'll go out the portfolio shortly. We've already we're forced to cash in, but that was one success. Now, the incredible thing about the resource side in Africa is most of the stocks are listed in the big markets: AIM, Canada, Australia, South Africa. So I have access to a lot more liquidity than the non-African resource companies.
Just in terms of some of the other areas of interest, Bruce, you've indicated agriculture. I think it's foreign. It's certainly foreign to me how to invest in agricultural companies, but you say you can't find enough of them.
Yeah,
what's happening on the continent? Is it becoming the breadbasket of the world by some stretch?
Yeah, I don't know enough, because a lot of it is private, and a lot of it is helped with NGOs and governments, etc. Very few listed companies. We're praying that we'd get a couple more listed companies that we could grapple with.
Do you, in terms of the fund's mandate, are you allowed to hold commodities directly in the form of ETFs or exchange traded products?
Good question. I mean, in April last year, that's what I wanted to do. I just looked at the market and my stocks, and we had done incredibly well in the portfolio, beaten our MSCI World Index Commodity Producers Index that we try and align and benchmark, beaten that easily. And I needed to protect the portfolio, and I was very keen to buy Rand Gold ETF. And in the event, we decided not to, that we would just stick to stocks. But that is how I would like to protect a position that when I've done really well.
Now,
we've got half a minute.
One of your favorite picks, your favorite pick is still Pan-African Resources. You've owned this for some time. I know you've owned this for some time. Are you going to carry on holding it now with the Evander acquisition being put into effect?
Absolutely. I mean, I've got a big position. It's my lead position. The rights issue is way at a big discount, so I'm going to have to follow that. And also just my history and knowledge of Evander, I'm very confident that the guys have got a nice opportunity to work on there.
Bruce, thank you very much. So a cluster of African funds to select from, but
Absolutely.
lots of them are high entry value. Bruce, you need $100,000 to get into your fund.
That's for institutional investors. We can do private investors at $5,000.